Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back. Welcome back for another of my episode. This week, I just want to have a quick recap of what has been have gone on the last 6 months or so, and obviously just how the trading is going through. Essentially, we have, of course, great recovery. Joe Biden came into office from become the new U.S. president, and we don't hear much of Donald Trump anymore. However, the 100-day or so just sort of came up and passed in the U.S. but the stock markets continue to improve, as if nothing much happened. In the case, like as if COVID-19 really didn't damage anything in the U.S. anyway, but also in Europe and around the world. The stock market seems to go defined what's happening on the main street. The COVID-19 came and initially detected in Asia, in China first, and then went to Europe and in the US, and it got a lot of this lockdown. But the stock market seems to think that the markets can recover and go to a new high in most stock markets. And then we got obviously number of second wave, third wave, and now India is suffering quite a bit, but obviously it's already came down a bit more. However, I think in Asia, in Japan, for example, and so South Korea seems to have a third wave now. So, and UK has eased the lockdown, but slightly increase of new cases being detected, and this time there's a lot of variants going on, not just COVID-19 now. You've got variants from UK, we got variants in South Africa, we got variants of the COVID-19 in Brazil, and now apparently the one in in Asia or something, or somewhere. It's a mixture of Indian variant as well as the UK variant or something, and it's also detected in UK as well. So I don't know what might happen next, but essentially, with all this going on, part of the world still sort of some kind of lockdown in the West, but in the East it's a lot better. But a lot of businesses sort of didn't survive. And however, the stock markets don't seem to take that into account and just thought everything go back to normal and then some, because the U.S. government or government around it was pumping loads of money into the stock market. And so the stock market basically is saying everything is hunky-dory, sunshine is very good, but the main street is telling different things. You go to any of wherever you live, go to the town, you see a lot of places for rent sign, for sale, and there's quite a lot of people got no jobs, or kind of thing as well. But in this background, we have the stock markets telling us, wow, everything's fine. But then when you go to shop, buy food generally, there's inflation. Things have got a bit more expensive than we have about a year ago or so, and all of that is sort of like a backdrop for the next 6 months to come. And obviously, you have people start now realize there is the incoming inflation happening, and the gold suddenly gone up a bit more now. People start to realize because of a hedge of the gold, but also hedge against inflation, hedge against U.S. dollar being what you call devalue, so to speak, because there's just so much money that's been printed by U.S. government. And Joe Biden basically came in office, basically what's called have put in the law, or the 1.9 trillion dollars bill, basically just give people U.S. give people more money. But there's also now that's on top of what President Donald Trump have done. Now President Joe Biden is talking about another 6 trillion of infrastructure bills or proposal to change and things like that, and that is sort of just going to make the market even more jittery, I think, about inflation and stop with the U.S. market. But as far as concerned, this is like it's like two worlds. Stock market saying everything is sunshine, but the main street we all see is not. And I think in the next 6 months we probably see quite a bit of things. And I personally feel it's like a storm coming. all of us can see it, but somehow the stock market seems to go the other way. Yes, the flood of money from the government around the world have to go somewhere, and that seems to have gone into the stock market. And also, the other thing is because of lockdown, a lot of people lost their job, but also a lot of people who managed able to work online have moved away from the cities and go to the suburb area and countryside and so forth. And you see the house prices gone up because people move away from the city center or mass work park area, and then go to other places, go stay at home and work, and because they stay there much longer than usual. When all of us go to work, we don't stay at home and then only come back home at night, and stay at home all like 24/7 all the time. People want bigger space, so they want to move away from the city where they can get more space for the buck, so to speak. And this causes quite a bit of rise in house prices. Well, in the Western world anyway, definitely in UK here, and in US as well. And all of this happening at the same time. You go to the street, you see a lot of places, like I said, for rent, for sale sign. A lot of people lost their jobs, and the other thing is obviously a lot of in UK anyway, so I'm sure in other parts of the world, you've been the government basically have delayed any eviction of commercial tenants as well as residential tenants. So people who've been renting, either it's a business or residential, or people paying mortgages because they have no income. Either they lost their jobs or the shops not being shut down, closed, so to speak, due to the COVID-19 restriction. Commercial probably the same as well as residential. It's going to face quite a bit of problems to pay their rent or mortgages. And UK in particular have quite a bit of problem. I'm sure America is the same, but the governments around the world, basically, or in the Western world, try to delay this, this effect of eviction by having an extra long eviction process, or moratorium, basically a whole fire case for eviction, or any eviction from repossession from properties, that kind of thing from the banks. So all this is stirring up problems in the next 6 months or 12 months when the lockdown eases, people start to go back to work, and then the government's pause on evictions and so forth, and the law rules all come to an end, and you see lots of people who start not just because losing their job. They basically losing their houses because they get evicted, either renting or the house get repossessed because the bank had to get the money back, right? And we got to see quite a bit of problems going to happen in Main Street soon. As far as I'm concerned, the next 6 months it's going to be quite a bit of things. Personally, it's going to be volatile as far as I'm concerned, and the market may suffer a reset, so to speak, as inflation definitely coming in, and then you have banks probably feel a bit of more pinch because government around the world can't continue just keep on printing money, right? So sooner or later they have to slowly slow down the money flooding the market. What does that mean to the stock market? And that probably cause it to crash. And then the banks, which I talked earlier, which hold the mortgages, on the other hand, people cannot pay. So what they do, they just sell them on the market and make people evict them from the houses and so forth. And this is going to affect banks' earnings. And all of this haven't actually show up yet, and we will see quite a bit of problems. As far as I'm concerned, next 6 months, or maybe the next couple of months, because of the inflation has been way above the 2% in US anyway, and also in UK, way above the consensus of what they were expecting to be comfortable by the government. There's talks now of possibility, what Yellen is doing in America, testing water, possibly early increase of interest rate. And this is going to cause quite a lot of problem down for the stock market as well as for the government. And we just have to wait and see what happens. But overall, I see big inflation coming along, and US dollars, just far too many of them going around. And then we have obviously inflation, because most things nowadays is rated in American dollars. So if American dollars, weakness continue, we probably see, like, for example, crude oil continue to go up, gold's already gone up, lumber, apparently wood, has gone through the roof. around the world with futures, simply because people just moving houses, new houses got built and so forth. And on UK as well, there's I think last week and this couple of days ago, basically a lot of shops that sells merchandise for DIY, for house buildings and so forth, fixing houses. They all say the materials getting more expensive. They go past the increase in lumbers or plasterboards or plasters and whatever equipment that cement and so forth, got increase in cost. And that's it cause inflation as well as food and probably house price and everything else. So we just have to wait and see how things go. But for me anyway, I think the US dollar index weakness is definitely a big theme, plus the inflations and plus possible interest rate that actually all coming through. And I think that's just going to cause quite a bit of a problem later on. And most of all, I think we can see probably quite a bit of increase in crude oil as well, similar to 2007, 2008. We have the similar effect, and then after the recession kicks in, and because U.S. dollars increases so much in volume and circulation, everything rated in U.S. dollars going through the roof, so to speak, a bit, especially on the crude oil side. I think there's quite a bit of things will come for next couple of years when crude oil probably follow what is happening in the history. But I think the main thing first will be gold, as far as concerned, because of people hedging for inflation, but also main things US dollar index, US dollar weaknesses. So anything that is rated in US dollars will go up. But that also means that anything that is any of the foreign exchange rate against US dollar probably go up as well. And that probably play a havoc to countries around the world, because a lot of them do export and so forth. But on the other hand, China seems to be allowing this Chinese dollar, Chinese yuan to increase in value. And remember 2019 and so forth, the President Donald Trump said, or his presidency administration basically say China is a currency manipulator. Now, none of that has been talked about by U.S. government, by Joe Biden, President Joe Biden. But the U.S. dollars continue weaken, Chinese dollar will continue to increase, and I think that there is some sort of manipulation by the Chinese government, as far as I'm concerned, because overall it's a closed system. It's not an open system, financial market anyway, in China. So the Chinese government have a say to the exchange rate of the Chinese dollar and how it's going to be used and so forth. And for the U.S. The Chinese dollars against U.S. dollars to increase in value, it must have a blessing by the Chinese government, in the sense that I think the Chinese government, not many people talk about it, is using the increase in the strength of yuan, Chinese dollar against U.S. dollar to help it to fight against the inflationary incoming inflation or import inflation from anything that's rated in U.S. dollars. In a sense, that's how they fight it. But overall, for China, I think it's a win-win for them, because as far as I understand, that gross domestic products every year is only 20% account for is export base, and so if the increase of Chinese dollar will harm the export, but the other 80% or so, buying a lot of stuff from overseas and other countries, will basically help it to to able to buy things cheaper from around the world. So it's a fight against inflationary effect. So I think overall China will benefit from it. And out of all this, overall, I really see the going forward, the US US dollar index weakness causes gold to increase, silver. We already seen that with copper last year. Probably that will continue a little bit, but not as much as last year, but will continue. And then you see crude oil actually going up as well. And in foreign exchanges, a lot of them actually will change in value, or increase value, simply because US dollars is down, but against each other probably stay where they are. But so this is for me anyway, for next 6 months, the big theme is US dollar index weakness, inflations and coming through, and how to play with it. And overall it's a mixture of things, and we'll probably see a lot more problematic issues on the main street. People, yeah, the those one that have able to work from home kind of thing will probably continue work from home, but a lot of people will, have already lost their job. May will still be on the door because not many businesses, not all businesses have basically survived the COVID-19 lockdown, and a lot of people probably just close the shop, especially like if you are commercial tenants, you rent a shop to sell shoes, for example, because of COVID-19, you might shift some of that to your process online, buying things and selling things online using Amazon, Amazon account or whatever, doing things online. But you still have to pay the rent, insurance, and property tax and so forth for the rental property, but you're selling shoes from on the main street, and because you've been forced to close the business and only do online, you're probably suffering quite a bit of profit loss and so forth. And so, how can you pay back the tenants, the landlord, when the lockdown finishes out of the much reduced income that you've got? A lot of those businesses probably just fall in the town and say, okay, I have enough, I'm not even continue, and therefore defaulted on paying the landlords, and then the landlord, because they might not have all the deep pocket like a lot of people does, or big commercial company, and they against default on the banks, couldn't pay the mortgage and so forth. So it's like a chain reaction kind of thing. So those are the type of thing I sort of seeing coming in. But I think also the other thing is the interest rate. A lot of people really not talking much about it. They are a bit shocked, but I think the interest rate increased because the inflation increased. If the U.S. government or government around the world really are interested in controlling the inflation, which I think they do, to actually match the fast increase of inflation coming through, they probably have to increase the interest rate quite fast as well. So people with fixed mortgages or fixed interest rate mortgages will be in good standing. But anybody on variable rate or buying or try to get a new mortgage probably will have suffer because the interest rate might go up. Probably later this year or maybe early next year as well, but it could come much earlier, much faster, and that's I think the black swan thing. People expecting it, but didn't expect it to come so fast so quickly, and that could knock the stock market up on his back as well. So a couple of that, all this inflationary stuff, all this US dollar weakness will probably, in my view, cause the market to reset a bit, and then we probably see, I think, the good times of stock market going up, to be to even higher than March 2020 level. I think it's probably get a bit more reset and then come back to more realistic level. So that's basically my 2 cents worth to the next 6 months, and look at what happened last 6 months and so forth. I do feel there's quite a bit of problems coming ahead. So I think it's a storm coming, but we don't know how bad the storm might be. But we all can see quite a bit of dark clouds happening. In my view, it could happen relatively quickly, especially China and U.S. still having a spat each other on trade talk, and also U.S. a lot more focal. So is China as well, a lot more focal of what the U.S. say he's doing or whatever, and U.S. activity in South China Seas and so forth is causing concern. There might be war happening, who knows? And then that will be good for gold as well. But the other thing I think I want to take away is this. I just read it last week. Essentially, HSBC bank is getting out of U.S. market, selling all its U.S. operation and concentrating in Asia, which it did before. I think for HSBC it was bad going into from Europe and going into America. First, during the subprime problems, they bought some subprime lenders and they caught themselves in the bailout bundle. And then obviously there's problems with U.S. sanctions on Iran, and I think HSBC got caught doing business in Iran government or something, Iranian government, and got fined. And because of that, it got quite a lot of restriction and had to come clean with a lot of other accounts or whatever things it does with other countries, within other countries. And then the U.S. government under President Donald Trump uses that and using the data to go against Huawei, and then Huawei obviously Meng Wanzhou got arrested in Canada. All this affected HSBC standing within Asia, within China especially, and I think it'd be good for it to actually get out of American market or even Europe market and concentrate in Asia, because as far as I'm concerned, for next 50 years it's Chinese time as well as Indians time. Just simply because the population, there's more people over there, more younger people over there, and Europeans and in America. Even Latin America, the people are getting more older. The dynamics, the business opportunity, I think, so far is in Asia. So just basically going there is a good move as far as I'm concerned. But it also shows you, from a trading point of view, it's something that everyone should learn about it. Why did HSBC gone into US in the first place? It was initially all because it was making quite a bit of money in Asia and Europe, and then suddenly it just sort of then gone in and did quite a bit of work in America and tried to break into the American market. And what happens then? It basically got itself in the muddle, and all this is happening while it is having a good time in America in January at the start. But all this because they were flush with money, they were very big ego, and then they didn't watch out their backside and the downside, and then slowly causes more problem themselves. So this is from trading point of view, this is something good lessons for us, all of us, to learn. Simply because when you are flooded with money, just remember and be careful. You can make very stupid decision simply because you are being a street of wins. You have 10 wins or 20 wins straight in a row, and then you suddenly forgot all the rules, and you think you can bend the rule, you can become God, and the market seems to bend your will for a limited time, but during that short space of time during trading, you feel you're God, and whenever you change the rules a bit, the market seems to doing the way exactly you were thinking it to be, and it's making lots of money, and then you stop following your process, you stop being careful about your downside, and slowly and get yourself in the middle, and then cause lots of problem to yourself. So from my point of view, the HSBC move from away from the US market is basically telling us, all of us as trader, follow your process, especially trend following. Follow your process. Sometimes when you are making money, it's not because you're great, your system is God, or everything's working. It just happens at the time the market is the wind of the market is blowing in your way, and you got to sell up, and you basically help you to sell in the right direction at the right time, and you there have captured that trend, and you make lots of money out of it. But that doesn't mean that you're God. All it's doing is you have caught the right wind. You're on the right bus, so to speak, and went from A to B, and you caught that bus on time, make lots of money out of it. But if you throw all the process out the window, you will regret it, because it's the process that can make us get us where we are, and the process give us the quality of work, and basically that also protect us as well as trend follower. Our mathematical formulas give us the edge. If we don't follow every trade, or only follow it when the trade is making us money, we will lose our edge, and then over time we will lose big money, especially during the time when you are high, you have been making a new financial high in your account, and all the processes, all the thinking that you put in beforehand, all the hard work you've done is gone out the window, because you think you can bend the rules, and it causes problems. So as far as I'm concerned, that's a good lesson for all of us. Remember, as trend follower, we stick with our process. We don't think, don't really use emotional as a trading indicator kind of thing. That's the whole idea about trend following, is use method based, mathematical based, so you then do away with all this emotional trading. Anyway, that's enough for my morning for this week. Next week we'll have a look of the trend following portfolio I have, and see how things went last week. Okay, first off the bat is Apple. Short term is sell, medium term is neutral, long term is neutral, same as last week. Next is Amazon, same as Apple. Short term is sell, medium is neutral, long term is also neutral. From last week it was a bit sell for long term, but this week changed to neutral. So a bit of movement there. Next is Australian dollar against US dollar. Still short term is buy, medium term is neutral, long term is also neutral. Over the past week or so, you've seen, we probably seen quite a bit of movement in US dollar index. It's trying to move back above 90 and stay above there, even go try to tackle 91 with the inflation's actually number comes out, and everybody was worried. And the US dollar sort of index went up to 90.77 area, kind of thing, and then came back down below 90 and went up above 90 again. All the while, it's tried to stay back above 90. It seems having problems. Couldn't stay there for long. But at the same time, when the Australian dollar against US dollar, you see that it's still above 0.77. You haven't actually went down to 0.76 or anything lower. So 0.77 seems to be like a bottom at the moment. They tried to go above 0.78 for quite a few times. Actually went over there, but it couldn't keep itself. So it's this 100 about 100 pips kind of thing, within the area. It's been going up and down. But I think if the US dollar index is actually weakened, which I'm expecting to be, then we will probably see a lot more movement. Especially, Joe Biden is thinking about another 6 trillion infrastructure bills or something to propose to the Congress and so forth. If that happens, or any form of it actually happen, let's say half or a third, you already in the U.S. debt is already 7 trillion, 8 trillion. Put another, let's say 3 trillion on top. A third of what he was asked for, that's like 10 trillion, and that's only what we counted for. What about medical bills and everything else, pensions and so forth? You talk about 20 or 30 trillions bills that U.S. government have to pay, that kind of thing, liability and so forth. So overall, I think U.S. dollars, which have been talked a lot, saying it will die because I saw this go down big time because of all this unaccounted debt. But so long as people still believe in America, I think U.S. will be okay. I think it's very much similar to what happens when Britain was the top of the world and everything raised more or less rated in British pounds, and then US came in, and then everything then moved to US dollar base or something. That sort of movement from the dominance from British into America is takes 150 odd years or something. Take quite a bit of time for it to transition. I think the similar thing will happen when it transition from America into China. The dominance, or at least economic power-wise, it will take some time, and I think U.S. dollars will still be influential, just like British pounds, but probably less over time. But I think that probably maybe beyond my lifetime. But I see things how things may go. It will probably take as usual, take quite a bit of time. But as far as trend foreign concerned and markets concerned, I think, if my thesis is correct, U.S. dollar is going to collapse or weaken significantly for the next 6 months. And I think U.S. dollars, the Australian dollar against U.S. dollar will go through the roof, just like everything else. It might have a bit of a dampen down a bit by the bad relationship currently between Australia and China. But if the Australian government play, its cards right, and China start talking back to Australia again, I think there'll be another, rocket fuel, so to speak, put it behind Australian dollar will go up. So I think to play catch up, I think Australian dollar is the one that probably got a lot more legs to go to watch out for. So just continue to watch this one. Next is Brent crude. Short term is a buy, medium is neutral, long term is a buy. Same as WTI crude oil, US crude oil. Short term is a buy, medium term is neutral, long term is a buy. So this, I said before, is continuing to move up. It's basically one-way street, more or less, from April last year when it went temporarily to minus negative territory, and it's been going up. And I say earlier, if US dollar continue to weaken, I won't be surprised in a year or two we see, instead of 60, 70 US dollar per barrel, probably seeing maybe 100 again, kind of thing. So that's why I'm sure this one got legs, but it's gonna take time to play it out. But don't ignore it. Next is DAX. In Germany, short term is a buy, medium term is a buy, long term is a buy. So that's very similar to US side in Dow Jones. Next is, yeah, of course, Dow Jones. Short term is a buy, medium is neutral, long term is a buy. So it's going up there, okay. But I think Dow Jones might have reached a recent high. I think about 35,000. That was done about 2 weeks or so ago. And since then, they have quite a bit of fluctuations, going up and down quite a bit, significant volatility. And last week was more or less recovering. And it might still continue to recover a bit more, but we just have to wait and see. Next is FTSE 100 in UK. Short term is a sell, medium and long term is still a buy. Overall, yeah, it's 6 months now since Brexit, and obviously we have COVID shutdown and now easing and so forth. And FTSE seems to, long term still reflecting good mood, but short term seems a bit of a cloud in the horizon. Especially now they talk about a new increase, possibly a third wave or the beginning of a third wave because of the increase of people catching COVID-19 again. But this time it's not the old COVID-19 in Asia or the one that they found in Eastern Europe, the variant that they found on the south in Kent. But this time apparently it's been mixed with the Indian variant as well. So we just have to wait and see how it goes. It might be more bad news coming later on, but who knows? Let's hope the UK government can keep things down. Next is gold. Short term is a buy, medium term is a buy, long term is a buy. Same as last week, no difference. Like I said earlier, I expect gold to continue to move up a bit slowly. But who knows? If any black swan events happen, it might just rocket it up. Like black swan, for example, like U.S. and China have a bit of a crash in Southeast Asia, in the South China Sea. Who knows? With China is been very vocal lately, and U.S. have been sending warships over. With I think UK sending another warship over there as well. It can happen. It's just like back in the 60s or 50s when the Russia put a number of rockets in Cuba. What happened? The tense standby between the U.S. and Russia at the time caused quite a bit of problems. It might happen again in Asia, and this will cause go up suddenly through the roof. But it can, once it dies down, probably go back down again quite quickly as well. So, but overall, I think gold is inflationary, inflation bet, safeguard for inflation, as well as U.S. dollars weakness. But the possibility of any hiccups, who knows? Like wars or something happens. But I will continue to stay with gold. Mainly, like I said before, I say it again, gold is my main play for this year. Next is Hang Seng Index in Hong Kong. Short term is a buy, medium term is neutral, long term is a buy. So this one is seems to be, I think, benefiting both worlds, maybe a bit of following a bit of U.S. lead, but also as well as China as well. If you have a look at Chinese indices, seems to recover quite a bit. The Hong Kong index seems to be stuck in the middle. So it's not moving as high significantly like what happened in Europe as well as in America, but it's not falling down flat either. So it's stuck in the middle. It's a bit indeterminate, but something I think is worth it to keep it on your radar, because if my hunch is correct, I think the next couple of years, China is the main point of focus, or even next 50 years, and Hong Kong Hang Seng Index is sort of like a proxy play to go into the Chinese market. So watch out. Next is Nasdaq. Short term is a buy, medium term is neutral, long term is a buy. So the recovery continue on Nasdaq and seems to be going the right way. Next is Nikkei. Short term is a buy this week. Changed from sale last week. Medium is neutral, long term is still a buy. So this seems to continue. There's talks about more COVID cases in Japan. Maybe a lot more people calling out the stopping of the Olympics, even though it's done behind closed door this time. But the Japanese government continuing, and we just have to wait and see how things might go, how it might affect it. Also, which I'll talk about next, Japanese yen has been doing some movement later as well. Okay, next is silver. Short term is a buy, medium term is neutral, long term is a buy. So first, similar to gold. Overall, I think silver and gold are definitely two things I definitely have on your radar for this year at least. Next is US dollar against Chinese yuan. Chinese dollar short term is a sell, medium term is a sell, long term is a sell. So what does that mean? The Chinese dollar is strengthening again, and sometimes just wondering what is strengthening of Chinese dollar. Why is that strengthening? Who is on the other side of the trade? Does that mean a lot of people selling US dollar and buying Chinese yuan? What does that mean? People getting out of US market or anything dominated in US dollar and going to the Chinese market? Buying all this Chinese yuan must have for one reason. I mean, trade dispute is still going on between US as well as China. So what do you have all these Chinese dollars doing floating around for? Must be, in my view, probably is that they might be going to China. I don't know. Yeah, remember Donald Trump tried to stop the Chinese stocks to flow on U.S. stock exchange because of increased accounting regulation. I don't blame them. A lot of things maybe it's not up to scratch and shouldn't be in the U.S. stock exchange. But people do see, what I see as well. I'm sure a lot of people see that, India and China is the future to invest in, and a lot of funds maybe start to go in there. Maybe that's also telling us something. Maybe they also agree now. The U.S. Indexes might be a bit toppy, or somehow they think they want to give a bit of reducing exposure in American market and then go into China, thinking China probably will run next 6 months or a year, who knows? But the increase of Chinese dollars is telling us something. I think it's better watch out for it. Next is U.S. dollar against Japanese yen. I said before, the Japanese yen seems to have weakened a bit and gone back up about 110 yen against the US dollar last week or so, but it quickly went back down to 109. But it just basically weakens and strengthens a little bit between 107 to 110. Seems to be all going around that area until US dollar go one way or another. I think it's probably range bound for a while. So once again, short term is a buy, medium term is neutral, long term is a buy. That's for US dollar against Japanese yen. Next is British pounds. British pound against Japanese yen, and British pound against US dollar. Both of these crosses are buy. Short term, medium term, long term is a buy. So the market seems to like British pound at the moment. It's continuing. Yes, US dollar weakness helps a bit, but also Japanese yen weakness helps a bit as well. We just have to see how things goes with British pounds. Next is Bitcoin. Short term is a sell, medium term is a sell, long term is neutral at the moment. Well, this Bitcoin been quite fluctuating lately. It's trying to go back up about 40,000 or 40k area, but it's failing. It's around 38 at the moment, 35, 38, that range. And as far as I'm concerned, it's kind of difficult at the moment with Bitcoin. Suppose people will talk about is supposed to be even better trade than gold. Gold have gone up, going back up to touch a new high, or try to attempt that anyway. But on this, at the same time, Bitcoin seems to go reverse. Now, Bitcoin being so volatile, who knows? It might quickly turn around and go back above 65,000. Who knows? But in the at the short term at the moment is a sell for short and medium term. Long term is neutral. But the audience argument about Bitcoin can replace gold as a safe haven or something. It's gone out of the window as far as I'm concerned. Next is TLT ETF, iShares 20. Short term is a buy, medium term is neutral, long term is a buy. So this continue basically just say people are buying bonds at the same time, and interest rate for those bonds, the yields are not great at the moment. We just have to see how things go. Next is Tesla. Short term is a buy, medium long term is neutral. One thing about Tesla though, I think I talk about ARK, Cathy Wood's ARK ETFs. It's very similar to, if you look at it, it's very similar to Tesla. So there was no secrets. Kathy Wood did say Tesla is one of the big, component within the ARK ETFs, and if you want to look at both charts, they are very very similar. So if Tesla continue to recover and make new highs, then the ARK will go up. But if not, basically you track one, the other one how things go. Short term wise, it might be recovering, but I personally feel ARK is. Even if Tesla might be recovering, I think ARK might have a bit of issue because it's such an open book. I said it before, a lot of people might be circling in the financial world on the ARK. Basically, a lot of it is in illiquid markets, and because it's such an open book, everybody knows what they're actually doing. There might be, voucher funds will be circling around, try to, pick up pieces of ARK. Who knows? We just wait and see what happens next. Now, next is Australian index, XJO. Short term is a buy, medium is a buy, long term is a buy. So this has gone sideways a bit, but last week I think have gone up. It's following American Dow Jones now, and see how things go. Next, last but not least, is Alibaba. Short term is a sell, medium term is neutral, long term is still a sell. So I said before, I like Alibaba, but the market is saying otherwise. It's just go, sell at the moment. This is something definitely on my radar. I'm just having a look on that one, keep it on in my portfolio. But I think Alibaba has teeth. I think overall it might be forced to be breaking up by the Chinese government because it's gone too big. But it does have very big dominant market shares, and also not. Two things that people not talk about much is the distribution. For it, like for a bit like Amazon Prime, you can deliver things in UK within 24 hours or something, or in 2 days. More places in UK. But similarly, Alibaba can send things across China within 72 hours, and that's no small deal. It's a big thing. China is a big place, and very much like America. And across, from one end to the other to send things within 7 or 40, 70 hours. It has a very good, network, at least, supporting system to send things around. And that is itself is its strength. Secondly is, as far as I'm concerned, it's the big data. Jack Ma has been talking about for a long time. Now, with the spat between U.S. government and Chinese government, and what Donald Trump did last year, tried to restrict growth of Chinese technologies, well, so to speak. Do you think people or businesses in China will go to use AWS, Amazon Cloud, or use Microsoft Cloud? They probably trust using Alibaba Cloud a lot more. This cloud data is going to make them a lot more money, and I think this is a string underneath this big data, using the Alibaba data. If the Chinese government can ensure that it is very much just stay within China and big in China and can control it, so it won't abuse its market shares. I think Alibaba, just this big data thing is the big things. Forget about fintech as far as concerned. Yes, it's a big thing, but it's stepping on top on the toes of the traditional banking industry, and it should be regulated. So all this speculation about Ant Financial being regulated or fined by the Chinese government. I mean, look at the financial industry in America. Always get fined. Look at HSBC fined big time, billions of dollars. For Alibaba, is like 5 or 6% or something. It's still of his total sale last year. It's a lot of money, but it's not as much. And I think this negative sentiment in Alibaba, to me anyway, is a bit of overdone. But that's what the market is doing. That's what trend following does. Follow the market. But underneath, I think keep an eye on Alibaba. When it turns, it probably can turn quite a bit quite quickly. And long term, I think this is something that you should keep an eye on, because I just feel Alibaba, just the dominance of it and the capabilities, and this cloud on its own. Just look at Amazon. How much money did they actually take from on the shares price? When loads of people use AWS, and Amazon is the leader as far as I'm concerned in clouds. Microsoft is next, and if China, being 1.4 billion people, with so many businesses over there, or maybe mandate by the Chinese government, just use cloud. Not what mandate, but not trusting AWS and worry about spat between U.S. and China, trade problems, technology problems. The Chinese businesses, without even direction from Chinese government, just want to stay within China, use Chinese cloud. In this case, Alibaba is the big boys over there, and that is the dominance bit. I think it's definitely good things for it. But at the end of the day, it's trend following. I'm trend following, say, sell at the moment, but I think it will have some good time to come later on. Something that we should all keep an eye on. Basically, that's the update for this week, and I will speak to you next week. Happy trading and stay safe. Bye for now.